This Week in Agribusiness. Serving America's most essential industry with agriculture broadcasters Max Armstrong and Orion Samuelson. And featuring agricultural meteorologist Greg Solier. This Week in Agribusiness is brought to you by ADM.
Hello, everyone. Welcome to this weekend's edition of This Week in Agribusiness. Orion Samuelson is away this weekend. You will hear from him, though, in just a few minutes on Samuelson Says. As volatility has increased in the markets and as the inputs needed to grow a crop have substantially increased in price, it is underscoring the absolute crucial nature of risk management. Our field reporter Janell Aust takes a look at how that is changing.
Whether it's marketing grain in a farming operation or buying huge quantities of commodities for large companies, it's all about risk management. Elizabeth Hund with U.S. Bank Food Industries knows those risks quite well and tackles it on a global scale. While participating in the recent Women in Agribusiness Summit, she spoke with us about some of the changes she sees in managing risk.
I think there are a couple of real important issues, whether it's the farmer or whether it's the processor. The first is to realize that this is now a global business. And if you're a particular producer in a certain area of the country, the price that you're going to get for your crop is going to be influenced by crops in South America, crops in Asia, crops in Europe. If you're a grain merchandiser and distributor, your prices are going to be influenced by the amount of importing and exporting that's going on in that particular grain. So I think it's very important for all of us in agriculture to realize that this is very much a global business and that we can't just look at our own smaller market.
Hund spoke with us about some of the biggest changes she's seen historically in risk management for marketing grains.
Particularly on the grain side, we have never seen the kind of volatility that we're seeing now. And that changes behaviors in the way that producers and distributors risk manage their crop. When the volatility index is as high as it is, and when corn prices can change 30, 40, 50 cents in an hour, where that would be a decade-long change 30 years ago, you have to bring in risk management practices, either with contracting or putting it against the board, or supplier risk comes into it as well.
These changes have expanded the marketplace and provided opportunity on a global scale for farmers as well as those that make their living merchandising commodities.
Where there's risk, therein lies opportunity. So if I am a regional grain farmer or grain trader, where my market might have been the upper Midwest before, now I have a global market.
According to Hund, there are certain points that bankers and lending agents look for in their client's portfolio for risk management before approving their line of credit.
The client needs to demonstrate a disciplined approach to managing their commodity risk, just because the volatility index is so high and they could stand to lose so much money. We try to put a cap and a floor on that risk. So risk management practices formalized in a risk management policy, endorsed and monitored by the board, are very important points when we're looking at extending credit.
With commodities trading in much higher ranges, it makes it imperative to have a risk management strategy in place, revisit the plan often, and be ready to make changes along the way. Reporting for This Week in Agribusiness, I'm Janell Aust.